My name is Olle Schmidt. I'm a liberal from Sweden, and I'm still a liberal, even though that we have severe stormy waters. I do believe that we should be cautious in many areas concerning what we are talking about today. And I think I'm welcoming this conference with the title, Striking a Balance for Europe's Financial Markets. I think that is very accurate. When I started in the Economic and Monetary Affairs Committee in '99, we almost have on every meeting some sort of saluting of the financial industry or paying a tribute to the banks. It's on the contrary nowadays. There are a lot of bashing banks and the financial industry, and you know it all. But I think the pendulum shouldn't be going too far. Even though, of course, being a liberal, I realized that a lot of things got wrong. And you, and perhaps also especially the politicians, they did severe mistakes. But we should be cautious in how to deal with the crisis at the current state of play, and not doing, even though that we are willing and want to do the good things, we shouldn't try to do the things that actually could hamper the market even further. That's a sort of consumer information for you, and you know where I am. It was easier, I must say, to be a liberal 10 years ago. But that's something you actually cannot just leave as a trash behind. I think that MiFID I actually has been a true success, and we should also admit that. Sometimes I think that perhaps if the member states had implemented the legislation all over Europe in a more proper way, perhaps we shouldn't have been dealing with these problems we have today and the new legislation. But anyway, I support the directive and regulation today. And I do agree that we need more transparency. You know, I'm coming from a country where we actually had a legal act in 1766 about transparency. So we are a fairly transparent country, even though we know how to darken if we want to do that. So I fully agree with the previous speaker in this sense. That transparency requirements for equities can be a model for non-equity. But we still have to look at each type of asset class separately to find the best calibration, and I think that was what you meant, Simon. For example, I question if bonds should be treated with the same transparency requirement as equities, since the bond market is less liquid. For smaller government and mortgage bond market, it's a particular sensitive balance between efficiency and transparency. And as I said in the beginning, I'm coming from a small country up in the north. Derivatives that are eligible for clearing are naturally also suitable for more transparency. However, it is at the same time important that a more lit trade do not harm the function of the market and creates higher costs for the participants. For instance, pension funds. I'm nearly retiring in a couple of years. In some cases, there can be a need for limiting the pre-trade transparency. But at the same time, we have to be cautious to increase exemptions from pre-trade transparency. I think this is one of the key issues, actually, and I know that the committee will have a very thorough discussion concerning this, and there you have to put your argument and do it in a pedagogic way. As a rapporteur for Investor Compensation Schemes Directive, I'm particularly interested and will focus on investor protection provisions in the MiFID and the current review. Investment protection rules in the MiFID fill a very important function. And there I could see that the implementation of MiFID I, as I have bank accounts back home and bank accounts here, that it was not at the same level, I must say. A key concern is how can we provide investors with more protection without limiting investor choice? Because as I said, MiFID gave us more competition. It has given us a broader market, freedom of choices. And you will, I think, hear some colleagues coming here and say that they will state it as a fragmentation of the markets. But I would say that goals that we were intending to reach, in broad perspective, I would say we have reached it. Some remarks. We have to look at the execution-only regime in Article 25. And now I saw that someone here is from the Central Bank of Ireland. Is that true? At least there was participants here. Because I bought shares, not in the Central Bank, but the Bank of Ireland in the spring. And my advisor at my bank, he thought that I was a lunatic. But he actually executed the order, even if he believed that I did a very wrong investment. I would see it like a sort of moral investment, saying that I think Ireland will survive. Anyway, I've only lost 80% or 75% yet. That might be a joke, but on the other hand, am I capable to make my own decision? That's what I will try to stress in this example. I think we have to keep the execution-only regime and not try to overprotect investors, at least not Mr. Schmidt himself. And I have a friend back home. He was chairing one of the committees, and he was a politician, and he liked equities. And when I start investing in shares, he's told me that this should only be the money that you don't need for 1 year or 2 years. You should have always a salary of 1 year at your bank account before starting investing in risky business. The regulation should not regulate the behavior of the investor, but protect those who seek advice. And that is, of course, extremely difficult. And some comments on inducements. Product regulation is not enough. I was the rapporteur of UCITS. There we have the protection and the definition of products, as you know. We also have to focus on the business rules for financial advisors and particularly look at the potential conflicts of interest. We have, for example, to look closely to the proposal from the Commission to ban inducements in portfolio management. That's Article 24. Should we continue to allow the practice of commission fees, kickbacks that fund providers pay financial advisors for selling their products? That's a question mark. Should we do that? Can, and that's another question, a financial advisor be independent? Is that possible? And give neutral advice? I think this is very problematic. On the other hand, and here you see I'm a liberal, banning all inducements could cause serious effects on the market. The offered product range would decrease and the cost for portfolio management could be higher for the investors. The client may have to pay more for the investment services. It could also result in fewer products and service providers and thereby lead to a decrease in competition. We also have to look at the reporting obligations of an investment firm as to how investment advice fulfill the specific needs of an investor. That's also Article 25. It is very important to find a balance between the need to simplify and provide accurate information on, for example, for the ordinary retail clients. For me, and I've been dealing with this in some reports in Parliament, for me, education of the investor and also the retail investors is crucial and a part of the investor protection. And if you are asking a survey, Commission they have done surveys several years, and if ordinary citizens can explain the interest rate and the mortgage loans and inflation, they cannot. Sometimes even they think the politicians cannot, but that's another thing. In order to enable investors to understand and compare different investment opportunities, he or she receives education on and advice on the products. And I think this is very essential. About banning, I'm not in favor of banning different products. I believe that the industry find ways to go around product bans. Instead, I favor strong supervision of the financial markets. And I also support that ESMA has a stronger role and have the power to intervene and take appropriate actions when necessary then it's necessary and problems arises. ESMA and national regulators, supervisors, must be given sufficient human resources to monitor the financial market. And that is, I must sadly say, it's not the case right now. But we have, from the European Parliament, we have always supported that the authorities, the European authorities, should be having a more solid budget. That is not the case at the current state of play. It also, and that creates a link to the discussion that ESMA and the authorities need IT resources. Prohibition on marketing certain types of financial instruments or to certain kinds of activities should be done under strict coordination by ESMA. Such measures should be taken only in exceptional cases, and it is important that the criteria for when ban of products should be strict or they should be strict and crystal clear. Let me conclude by saying, and returning to the title, Striking a Balance for Europe's Financial Markets. For me, this is essential because if we want to have a strong and competitive Europe, we also need a strong and competitive financial industry. And sometimes I've been a bit astonished that the industry, and I'm not the one to bully or bashing the industry, but sometimes some individuals, they have gone too far. And greed is not supposed to be a part. I am always relying on my banker, that he is a decent man. I have had several during my years, men, women, and they have tried to do their utmost in their jobs, providing me services. And I hope that we can have a legislation that actually is in a way supporting the good guys, the good men and women in the industry. Because the lack of trust now is perhaps the most severe problem. Legislation and political decisions will not make that fly away. It's an obligation for the industry, and it's especially an obligation for us and me as a politician. But we will do it. Thank you very much.